Good morning, everybody. New weekly video call this morning with an update on the S&P 500, which is reaching a key resistance zone. I'm also going to to make an update on what's happening in Europe with the Euro Stoxx 50. We're going to talk about gold, and I will also update the technical scenario on euro dollar. So let's start with the S&P 500. If we look at this index, an amazing rally in January, February, back to the 2800 area. So I discussed this major technical resistance zone numerous times over the last couple of months. As a reminder, it was my maximum upside target for the rally, which started in late December. And we can see that this area has been hit last week and even surpassed at the start of this week. But what's happening right now is we are seeing massive profit taking around this level. So the key resistance zone is obviously not ignored by the market, and we can see that investors are obviously selling pretty aggressively close to this resistance. So it confirms the view that we are probably starting a pullback, a correction on the S&P. It's not very easy to say how low it can go in the near term. I would say that there are two potential support / downside target in the short term. The first one, which is the minimum downside target for a correction, is around 2700. You can see that it's the first Fibonacci support, and a stronger support is around 2640, 2630. You can see that it's the second Fibonacci support, and also the lows we saw in late 2018 before the breakdown. So obviously, overall, potential start of a correction, probable start of a correction, I would say, from the 2800 area, and possible start of a correction to mean 2700 and potentially lower around 2640. If we complete this view of US indices with a chart of the Russell 2000, so the Russell 2000 is a broad-based index, much more than the S&P 500. We can see that unlike the S&P 500, the Russell 2000 failed to break above its 200 moving average. We can see that the 1600 area was obviously an important resistance zone. It was not ignored by investors, and what we saw over the last couple of days is the biggest correction since the start of the rally in late December. So a significant trend reversal here. I'm not telling you that the market will go from sharply up to sharply down, but obviously it's an indication of a short-term trend change at least. What's the downside risk on this index? We can see that there are very important supports, let's say around 1480. This is, for me, the short-term downside risk on this market. I think we will, after that, we will start to see a technical bounce from this support level. So short-term outlook deteriorating, mid-term outlook still unclear, and at least not turning bullish on US indices. If we now take a look at Europe with a chart of the Euro Stoxx 50, we can see that the big picture of this market is still pretty confusing. Why? Because we have obviously saw a very strong rally since the start of the year on European indices. Since last year, I would even say that the Euro Stoxx 50 has been even stronger than the S&P 500, so that's pretty new. But on the other hand, you can see here this index is also becoming strongly overbought on a daily basis. So this is one of my favorite contrarian indicator. And this is the first contrarian sell signal I have seen according to this indicator since November 2017. So an unusual signal. Overbought conditions on the Euro Stoxx 50 despite persistent strength. And I will add that this time we cannot really say that, unlike in previous years, So the S&P, the Eurostock 50 was in a clear uptrend. Right now, the Eurostock 50 is not anymore in a long-term bull trend. Why? You can see this that the 200-day moving average is obviously declining, and that even though the index is up very sharply so far this year, it's still trading below a key chartist resistance. You can see it here, linking three tops. So it's pretty powerful resistance. And given our bot condition and declining 200-day moving average, I don't think that the Eurostock 50 will be able to make a clean break above this resistance zone in the next few weeks, maybe next few months. So it seems pretty unlikely. And obviously, the Eurostock 50 will now need to take a breather before doing something more important on the upside. So a pretty mixed picture, even though the Eurostock 50 is still stronger than the S&P 500. Yeah, just in terms of downside targets, we can see that the downside risk in the event of a correction for the Eurostock 50 is between 3,200 and 3,100. This is where the first important support levels are located. Now let's go to the chart of gold. So this is the chart of the gold ounce. As you can see, this is a bullish chart, but gold made a pretty strong correction over the last 2 weeks. This is something quite strange for bulls, but I mean, we saw a few weeks ago that gold was massively overbought after the recent rally, back on a major resistance that I will show you in a few seconds. And for me, the steep correction we saw on gold is not so frightening. And I even think it could be a buying opportunity. Why? First, because gold prices yesterday moved close to an important support zone at 1275. It was also the low of mid-January. And you can see here a pretty nice contrarian signal. So daily perfected setup 9 buy, which is happening in an uptrend because gold prices are trading above the TDST resistance line, so it's this level. So pretty good contrarian buy signal, and the fact that we are seeing a start of a technical bounce this morning is quite encouraging and signals that we probably saw short-term lows yesterday, I mean at least this week, and possible start of a new rally back to previous highs, back to year highs, at least to the TDST resistance line at 1333 and potentially higher. So the key message I would like to share with you on gold is that the recent pullback looks like a buying opportunity. If we look at the broader picture on gold, you can see this incredibly strong resistance, which was hit in February. Start of a pullback. So right now, the key question is: are we starting a new significant correction similar to the one we saw in 2018? Or is it just a pullback ahead of a new test of this resistance and potentially an upside breakout? And as I previously discussed, I would clearly favor the bullish scenario in the medium to long term, which means an upside breakout in the medium term. Let's finish this presentation with an overview of what's happening on Eurodollar. So you probably saw this morning that Eurodollar is hitting a new 52-week lows. This is in line with what I wrote in my weekly report on Wednesday. I was expecting such a breakdown on Eurodollar, and it's happening right now. And you can see that there is still additional downside risk on the Eurodollar according to point and figure charts. I already showed you this chart, and I put it again in the presentation. I think that the Eurodollar should stay weak, potentially going below 110. And you can see all these downside targets on point and figure charts. So a cluster of downside target around 109, then another one around 106, 105. So the outlook is not improving on Eurodollar at all, and it's even starting to deteriorate with additional downside risk ahead. Thank you very much for listening, and have a great day and a nice weekend.